What is up everybody, welcome back to another stock market video, and today we're going to be talking about the breaking news of Tesla stock being included in the S&P 500. I'm going to go over what I've been doing the last 2 months knowing they would eventually get included and how I'm making money from it. I also want to go over the Q3 earnings that they released in October and what it means going forward for the energy business. Be sure to watch till the end where I show you how much Tesla stock I've got and also my gains and losses across my 3 portfolios. So I know I don't own a lot of shares and that's because I just started this year, but also this is a lot of money to me and I'm not rich. Please hit like as it helps the channel out and subscribe if you're into investing. With that said, let's get on with the video. First article from CNBC, we can see the S&P Dow Jones indices announced on Monday that Tesla will join the S&P 500 prior to trading on Monday the 21st of December. Upon entry, Tesla is already one of S&P 500's top 10 most valuable companies based on Monday's closing price. So this article here titled S&P Dow Jones Indices Consultation on the Implementation of Tesla's addition to the S&P 500. And this is because Tesla is such a big company that they've got to figure out when they're going to distribute these shares. So reading on November 16th, 2020, S&P Dow Jones announced that Tesla will be added into the S&P 500 effective prior to the opening of trading on Monday, December 21 to coincide with the December quarterly rebalance effective date. So due to the large size of the addition, they've got 2 choices here. Really, I just want to show right here that they're adding 1% into the S&P 500 and I assume that it's going to be worth $51 billion, which this will definitely surge the share price up. So moving into the charts, and why this is important is because this is how I pick my buying opportunity. So from here, we've got a wedge pattern, and what happened here is the stock splits that happened at the end of August. So as you see the wedge forming, I like to buy the low range. So as you can see another wedge forming, I've been buying around the $330 to $400 mark. So we're just going to update this right now to show the wedge has come up to here and then move this here. So we'll just move the bottom to $450, and I already know in pre-market it's well above $550. So I'm just going to have to wait till it updates later on, but I expect this rise here to happen. So before we get too excited about the S&P 500, what actually happens is that initially when it gets included, the stock price will rise up, but then it will come back down to a stable level. So the S&P phenomenon is the tendency of the stock to show temporary price increase immediately following its addition to the S&P 500. The price increase is mostly temporary, settling back down after S&P related buying has subdued. So it's very important not to buy a stock as it's shooting up because it will eventually come back down again. So next I just want to talk about Tesla's Q3 2020 earnings that was released back in October. So we're just going to read their highlights here. So under cash, they've got $5.9 billion increase in our cash and cash equivalents in Q3 to $14.5 billion. Operating cash flow less capital expenditure, free cash flow of $1.4 billion in Q3. So profitability, so that's $809 million GAAP operating income, 9.2% operating margin in Q3. And under operations, quarterly, they're showing record vehicle deliveries, profitability, and free cash flow. The build out of 3 new factories on 3 continents continues as planned. So this is pretty amazing Q3 summaries because we know that they're building 2 gigafactories, Gigafactory Texas and Gigafactory Berlin. So I just want to point out about Giga Shanghai of how quickly they can actually ramp these factories up. So construction began in December 2018 with the installation of secure fencing and site offices. The General Assembly building was nearly complete by August 2019. So that's pretty much inside 12 months, which is lightning fast. The factory initial production rate is targeted at 3,000 cars per week. So this really goes to show you of how quickly Tesla is ramping up their production and how much more money they're going to be making in the future. So this Q3 earnings report is 29 pages long, but I just want to take you to this page here, which is all about the energy business. Our energy storage business reached a record deployment of 759 megawatts per hour in Q3. Mega production continued to ramp at Gigafactory Nevada as production volumes more than doubled in Q3. Our recently introduced strategy of low-cost solar at $1.49 per watt in the US after tax credit is starting to have an impact. Total solar deployments more than doubled in Q3 to 57 megawatts compared to the prior quarters. So to me, as an automotive company, Tesla's share price is very expensive, but if you factor in the energy business, that Elon Musk has said himself that they will generate the same or more revenue as the auto. So what Tesla's building here is a full ecosystem for your house where you have your car, your charging, and their Tesla Powerwalls, along with their solar business providing power to your house, therefore not requiring a lot of power from the grid and making you self-sufficient. So one of the big reasons I'm still investing in Tesla is their battery day and their energy business, which is going to be a lot of money in the future. So reading from this, solar panels are usually able to process 15 to 22% of solar energy into usable energy, depending on factors like placement, orientation, weather conditions. I just want to point out the fact that if they're able to generate that amount of power to power some of your devices at home with their Powerwall, if their technology is able to enhance 40 to 60% of the sun's rays, that means in the same amount of area, you're going to be able to produce 2 or 3 times the amount of power that you had previously, just because they're innovating and their technology is getting better and better. So right now, the cost of solar in New Zealand, I worked out, is that the payback is going to be over 10 years. Right now, it doesn't seem to be economically viable. But if Tesla continue to innovate and get better efficiencies out of these solar panels, in the next 5 to 10 years, they're going to be making a lot of money as they drive these costs down, which you can see from their quarterly report that they continue to drive down the prices, which will eventually make this economical. So my final thoughts is that a breakout up or down was obvious looking by the technical charts that we saw. In this case, it's going to go higher because of the S&P 500 news. But also remember that after a rise like this, it'll always have a sell-off. But when it comes back down, it should have a higher, stable bottom. This will mean that billions of dollars will be poured into Tesla as fund managers have to buy into Tesla stock. Just an example of a fund we have here in New Zealand is the Smartshares USF 500. To me, I think that long term, this demand will mean the stock price should always be above 420. As far as what I've been doing, I've been buying Tesla stock at $400. So I'm back to saving money, as one Tesla stock is worth a lot of money and it takes time to save. So for the moment, I'm just going to enjoy this price rise with my 15 shares of Tesla, of which I have an average cost of $370 per share when I started buying back in June. However, Tesla is a phenomenal company, and whenever I get money, I'll be buying, obviously, on the dips. Well, that's enough for me today. Thank you for watching. May the gains be with you, and I'll catch you on the next video. Goodbye.